Good evening, everybody. This is now fun. This is now back to after a whole summer of just indecisive, I want to use words that shouldn't be said, but just lousy trend analysis. Down, up, down, just not only sideways, but waffling every single day. So there wasn't any place to put trades on that you knew were going to last. Wouldn't even last to the end of the day. So now this is where you observe the obvious. In 1, 2, 3 days, they essentially took this market from the bottom of that whole trading range of all summer to the top of the trading range of all summer. So now we're back in business as far as being able to analyze a trend, obviously. And the trend right now being kind of a J-hook pattern on the Dow. We can see what started the uptrend on the NASDAQ, an inverted hammer gap up. You can see the trend kicker signal. And again, the trend kicker signal is very telling in the sense that the result of a trend kicker signal is usually going to be a very strong price move after that, because that's telling you after a little bit of consolidation, they're still popping it in one direction or the other. So the fact that not only did they do a trend kicker, but they did it right here at the all-time high, pretty much gives us the indication that we're still heading much higher. Transportation index, you can see the J-hook pattern. You can see how it came out of this slow curve breakout through this level. Let's see if I can. Kind of broke out through this level on a slow curve. Now we're in a J-hook pattern. So if this is wave 1, wave 3 should take us up much higher. So I'm pointing out the obvious because it becomes much more obvious when you know what patterns to be looking for. And like back here on the NASDAQ, your probabilities of recognizing a strong price move is based upon knowing what the little signals, the little candlestick signals tell us. Trend kicker, inverted hammer. So just to kind of digress for a minute, again, December 3rd and 4th, we are going to be doing the full-scale online 2-day training. And this is, I keep reiterating, this is kind of the bread and butter of learning candlesticks. Once you know the little nuances of what each signal represents and how to interpret it and what it's telling us about investor sentiment, you'll be dramatically, pleased at the way that you can analyze a trend with much more accuracy and knowing where you should be in at the right times and knowing where you should be out of trades, to the point where instead of you being flip-flopped around by price moves, you now have much better control of your analysis. You don't have to listen to people like Kramer or anybody else that is out there spouting off their analysis or prognosi, whatever. You can pretty much see what's happening. And the reason I kind of pointed that out is right about in here, over the weekend, I probably heard 3, 4, 5 people say, yeah, we've had a strong move. Expect some profit taking. That's what the market is setting up for. There's going to be time for some profit taking. And I always come back to the fact that I'd rather let the market tell me what the market is doing. Some of the our futures trades. This is, we just went long on cotton over the last few days. And the reason for that is very simple. You can see what type of pattern was setting up. A wedge pattern. You can see you had buy signals here and then a close kind of up above that level. We're just staying long on cotton because it did break out through that wedge. Anytime you see a wedge breakout, it's usually going to mean that buildup of investor sentiment indecision has now broken out into a very decisive stage. Oh, what? I can't believe we're already looking at. Whoops, that's not what we want. Today, we had kind of a little breakout of soybeans. Again, kind of a wedge pattern. I'm going to be a buyer of soybeans. Lean hogs. You can see the slow curve. I don't know what that is. Slow curve right smack dab off the 50 and the T-line. Wave 1, wave 2, wave 3 should be up in this area someplace. Oh, is there an ETF for cotton? I don't know. Does anybody know the answer to that? Yeah, I guess that's the ETF. You can see the same pattern, a wedge breakout. What is the historical sentiment of the market day after Thanksgiving? Bob, they only keep it open until 1 o'clock. And I guess the truth of the matter is if you're sitting there watching it on the day after Thanksgiving, you may be the only one sitting there watching it on the day after Thanksgiving. Now, I'm going to say, unless you really need to sit there and watch it, it's probably not worth your time and energy. Now, there's two facets to that analysis. One, probably 99.999% of all the stocks are hardly going to move. But that means somewhere out there, one little teeny percentage, well, one little part of the percentage, one little, one little teeny percentage of stocks will be moving. So what happens is, because it's the very few of them moving, that's what everybody jumps into and trades because that's the only one moving. So, anyways, we're long live cattle right now. I think we came in at, where was it? 106. I think right about this area. Right as it broke through this range. Actually got in here and stayed with it. More than likely they're heading for the 200-day moving average. So the reason I'm pointing out some of these is when you know what the patterns are, look at our double doji. I'm not even sure if it wasn't on this day that we bought. And that was because of the double doji setup. Oh, okay. As far as, all right, looks like they're still heading higher. What else we got out there? Oh, crude oil we bought. I put out in the announcements last night, and it wasn't there. It was, I think we were going after the March contract. No, it's probably the December contract. 6. Yeah, we had our buy stop at, I think, 46.63. Right about in here. Because if it broke through this level, you can see what our pattern setup was. Let me make this a little bit bigger. Big morning star signal. That was your first inclination there had been a change of investor sentiment. Then they had a left-right combo that told us they weren't coming back below the T-line. So that was kind of your double doji, and a left-right combo, as we know, is one of your strongest signals. So that if it opened positive, which it did what is today? Monday. Last night it was starting to trade positive. You just put a buy stop right there, that if it came up through that level, it's more than likely going to go to the 50, which it did. So that worked out to be a good trade. So the reason I'm pointing this out is if you understand what the patterns are, what the signals are telling you, which direction you're heading, stochastics-wise and signal-wise, you're basically going to put yourself in situations where the probabilities are dramatically in your favor. So right now, gold is just lackadaisical. It might be bottoming, but right now there's really no trend that you can sink your teeth into. So this is an analysis to say, all right, there's some areas you just don't trade until you see the price moves start dramatically. Let's see. So if you know what parameters to be looking at, stochastics in the oversold area, inverted hammer, doji, supporting off the 50, you just get ready to buy this on a positive open and or trading back up above the T-line. That basically puts you in a high probability trade situation. So again, this isn't rocket science. This is just knowing what to be looking for, what signals to be looking for, and what confirms that they are putting you in the right direction or right position at the right time. So that was the reason for our buy on Kite this morning. Because look what was happening. This is a very easy pattern to recognize. This is the bobble. So if we understand that there was selling at the resistance level, the 50, and they couldn't close below the T-line, and they closed back up above the 50, if you took the 50 out of there, you essentially have a J-hook pattern. The fact that you do have the 50 there showed you very clearly where they were taking profits, where the resistance level was, and on this pattern right here, on this candle right here, it told you exactly what you wanted to know, that they weren't going to close below the T-line and they're closing back up above the resistance level. If it opened positive, you start buying. What's our target? Well, if this is wave 1, figure wave 3 is going to be up here someplace, probably back up testing this level. Again, this all becomes extremely easy, and I kind of stress extremely easy, that when I started doing candlesticks 40 some odd years ago, I was a terrible investor. I may have told the story where I spent so much money back then on the 900 numbers, where you called up and they said, you want to buy soybeans if it trades above such and such a level, and I'd pay $25 a call for that. And the biggest expense I had at the end of a month was the hundreds of dollars I spent calling these numbers. And that was my only criteria for getting in or out of a trade. And I was getting my posterior handed to me. Then when candlesticks came along and I started looking at it, I said, this just makes sense. So once I started recognizing where the signals were and where it was occurring, this put me in much better situations. I can't remember which hotlines they were, but they were the 900 numbers. When I first started trading commodities, just because I loved to trade, but I had nothing, and that's kind of why we're going into how to control your discipline, mental discipline, going into the emotional trading trainings here over the holidays. is most people have no trading program when they start. They just want to, they know they need to invest. They just don't have a format on when to get in. And even when most people get in, based upon something, they have no method for knowing how to get out. When candlesticks came along, it told me when to get in and told me when to get out. And it took me a while to figure out when to get back in again. So since then, as I say, just been, instead of being the panic seller at the bottom and buying exuberantly at the top, I'm looking for the opposite. Oh, we just did that one. I'm looking for the pattern setup. It gives me a high probability of being in the right place at the right time. And not only, what are the patterns where we can ignore the overbought stochastics? So here's one like right now, the J-hook pattern. The stochastics are in the overbought area. So the pattern, it becomes your important factor. So I tell people, you're buying the signal when the stochastics are in the oversold area. Usually you're buying the pattern when the stochastics are in the overbought area. And that's why we do the initial training session in two major segments. Saturday morning, we go through the 12 major signals and where they work and how they forgot what I was saying. Where they work and why they work that way. Then, taking that knowledge, we go into the Saturday afternoon and we go through all the patterns and kind of apply the information that's built into individual signals into the pattern. So there we can see our little Morningstar type signal here, kind of break out through this level so we know what pattern that is. $7 a trade is reasonable. It's not great, but it's not terrible. Yeah, I guess they're all kind of the same, and because of the let's see, the format or the structure of most brokerage firms, you might have one brokerage firm that's you're paying $4 a round trip, but their executions may be a little bit not as good as another brokerage firm that you're paying $9 a execution. So it all equals out. Remember, they're all in business to make money. So that's just part of your playing field. All right, so MOS, that's a good-looking chart. We can calculate that if we missed this move, which was approximately a 5-point move, we can pretty well calculate that this was probably going to be another 5-point move. So we don't necessarily have to catch the move on the first go-around. Since we know that wave 1 and wave 3 are going to be the same, we can pretty much calculate where our next, whether our next move is going to be profitable enough. Lionsgate, we started buying this one because of the big flutter kicker signal. Another one of the strong signals called a flutter kicker signal because a kicker signals where they open one day and close down here. The next day they gap it up and go the opposite direction. But they take it up, which is a good bullish sign, and does a doji. So this is very simple analytical mechanics. We know the rule of the doji. It's going to move in the direction of how they open it after a doji. So when they open it positive and start going positive, if we took out this little flutter, we essentially have a kicker signal. When analyzing the patterns, use log scale or rhythmic scale. It doesn't really matter. You're trading the patterns. You're not trading the chart setup. So now, after a strong price move, what's our next potential? A J-hook pattern. And how could we tell we had a J-hook pattern? Not really a sell signal. Not really any aggressive selling. And one main factor is they never closed it below the T-line and they started it back up. So if this was a 5-point move, this one should take you up in about the $28, $29 range. Oh, CRK, I got this out of place, but again, there's your signals. Morningstar signal, bullish Harami, Where did it occur? Right smack dab on the 50. This is where we take everything into what we call convergence analysis. The more pieces of evidence that we can converge into our analysis just on one visual glance, the higher the probability we can analyze things that are going to move in the right direction. Stochastics in the oversold area, buy signals, support on the 50. Now we've had a bullish Harumi gap up. Notice what the doji did today. Hit right smack dab on the T-line, came back up. And what's that tell us tomorrow? If they open up positive, you can be buying immediately because it's broken this downward trend channel off of buy signals, and it's going to move in the direction how they open it tomorrow. The trading on the 3rd and the 4th is the same as the one you did in January of this year. If we attended the one in January, do we pay again? No. If you paid before, you just email Abraham at candlestickforum.com and say, I'd like to do the review, and you come in for free. So one of these sessions, then everything else after that is free, because essentially what we're trying to do is that first session is taking all the information that you're seeing on a night like tonight, and you're seeing bits and pieces because we're analyzing each chart. So what we're trying to do is, once you learn it, then when you come back to these type of sessions on a Monday night or a Thursday night, it's now, I'll say, not confirmation, it's reinforcement of what you've already learned. So that now you're, so that's, basically a refresher. So you're, each time you come into one of these sessions, now you're just getting more, I'll think of the word. My memory's going bad. All right, I'll speed along here. AKS started out nicely today. Again, notice the J-hook pattern. Notice what this came out of, that slow curve. Broke out through this level. Started seeing some, there's your bearish Harumi, confirmed, but we can see the nature of this pullback, very indecisive. That pretty much tells us if this starts trading positive tomorrow, you can be buying it. Reinforcement, I guess that's it. As a nurse, that's funny, but I can't remember what I was talking about. Yes, once you've paid for one of these sessions, everything else is review. Now, it kind of reminds me of the story of the, you've probably heard this on my memory evaluations before, but the couples that were having dinner at the house, and after dinner, the girls went into the kitchen to clean the dishes. The guys went into the living room, and the guest said to his buddy, man, that was a good meal. And the host said, well, not as good as the meal we had last night. It was a great restaurant. Oh, what was the name of that restaurant? Darn, what was the name of it? And this place said, well, what's it sound like? He goes, I can get it. I can get it. Oh, what are those flowers that you give your wife when you're in trouble? And he goes, a rose? Did you eat at Rose's restaurant? And he goes, no. Hey, Rose, where did we eat last night? So that's kind of my. Let's see, NVIDIA. There's your other pattern. There's your kicker signal. What do we expect after a kicker signal? Strong price move. What type of price move? Usually a 45 degree. So there's one to recognize when to get in and when to get out. So if you started buying this one, the fact that they came up through the T-line, but today they came back down below the T-line, again, any time you close back below the T-line, close out the position. You can always buy it back, but once you've closed below the T-line, the probabilities of bearish sentiment stepping in is extremely strong. So it's just a very simple rule. And this is another aspect that we, what I try to teach people is a lot of people are afraid to get out. And this is all part of our emotional training sessions that we're going to be going into. I've learned a long time ago that if you close out a position, what most happens to most people, when I say most people, it happened to me all the time, that once I got into a position, it was because my superior analysis, because I was smarter than everybody else, was that this should be going up. And when it didn't keep going up, it was because other people didn't recognize why it should go up. So I wouldn't close out. Then finally it would come all the way back down to where I bought it, and I'm thinking, what the heck was I thinking? Well, now I can take a look at candlestick charts and get a much more concise analysis to say, all right, if I bought right in here and I close right here, all right, that was the probabilities. That was that 30% of the trades that you're probably going to take a loss on because it didn't work. So you move on to something else. And so instead of being hooked on the trade itself, I now just analyze it as, all right, this unit of my portfolio didn't work. Move on to something else. So right now, a lot of people ask me, well, which pattern is better? Or which ones are the strongest? And the answer is, it depends on what the market conditions are. A while back, we had a lot of fry pan bottom breakouts that made us a lot of money. Now it looks like the J-hook patterns are all setting up. So this is Select Comfort, CSS. That's got a high probability trade. If it opens positive, it's probably got a magnitude move like this. And where would be the target? At least up here to fill this gap. So at least you know you're putting money into something where the probabilities are pretty strong that you're heading in the right direction. CLDX, even more so. What's our analysis of the moving averages? If a moving average or at any level that looks like it's going to be a resistance level, they break through, they usually come back and test it. So do we know it's going to support here on the 200? In this case, we had the little inverted hammer, a doji, and then started trading positive. So that pretty much told us they weren't coming down through the 200 and or the T-line. So if this is wave 1, wave 3 is going to probably be about the same magnitude. Will they always work that way? Definitely not. But whenever you're putting your money in a situation where the probabilities are in your favor, at least you know that more than likely you're going to make money with that trade. And then there's always the possibility that when it does work, you're going to get the same magnitude, or a high probability you're going to get the same magnitude move as what happened prior to that J-hook. Here's another one that we started buying. Notice the doji sandwich breakout. Kind of another doji sandwich type breakout right here. J-hook pattern. We're just staying long on this one until we see a sell signal. We did Moss. Sprint. Never trade Sprint very much, but it's setting up for a J-hook type pattern. So if it came back up and broke this level, which would be breaking the top of the trend channel, that means there's a whole new dynamic coming into that stock. We'll get to Amazon here in a little bit. But everybody hang on to their individual charts until I get done. And then when I tell Jim to do the double line, then you can start putting in your requests. But I'll probably get to most of them before we even get there. So looking at ALNY, there's the typical, not typical, but the very clear bobble pattern setup. Where did this resist? Coming out of the scoop type pattern, right smack dab on the 50. So another element that we are going to go into on the 2-day trading weekend is if you're in the overbought area and you've just had a strong price move and it hits right smack dab on the 50, where do you think everybody and their brother is watching to see what's going to happen at a resistance level? They're going to wait and see what happens right here at the 50. So all we do is flip to our 10-minute chart. And if the 10-minute chart starts to get soggy, we take our profits. What's the worst case scenario? The 10-minute chart gets strong again, brings it back up through the 50. We can always buy back. But the probabilities are pretty much telling us that if it's up here in the overextended, overbought area, that there's probably going to be some profit taking there. That's where we want to start. Not only looking to where to buy something, but just as important, where do we sell when the probabilities are now going against us or going the other way. CRBP, another J-hook pattern on a little left-right combo, more than likely coming back up into the trend channel, which could give you a 20-30% upside potential. And HIIQ. And I guess it looked more like a J-hook pattern with the choppiness here and then broke out through this level. So there's a nice reversal signal. That's kind of your bullish confirmation, hammer bullish engulfing. When they have that big tail down to the downside, especially down here in the oversold area, and then come up positive, I tell you, there was a change of investor sentiment that day. I'm just going to pull this one up real quick because it's showing us this kind of fry pan bottom breakout. I would suspect you're going to get back up into this trend channel. It's not unusual to see a price trend move. Let's make this small enough. I think I can do this with a trend. We've got kind of a trend. It consolidates, and then you get a right fast move right back up to that level. So this is the area where you start looking to see whether you can get a quick pop. All right, so with the market heading up, the old saying is all boats rise in a rising tide. What we're looking for is the boats that have the highest potential or much more speed in that rising tide to rise. So we can see what's happening in Labu. Again, set up for a potential J-hook pattern, but more concise as you start looking and seeing a lot of the chart patterns in individual stocks. You've got J-hook patterns setting up. PRVN, doing a J-hook right smack dab where our typical broke through the resistance, pulled back, told us the resistance is going to act as support, which means we're getting ready for our next move. Yes, the Labu is just kind of giving us an indication that they're having a hard time closing below the T-line. We want to start watching this. So the Labu, being the ETF, is kind of telling us they aren't selling off, and we know that the biotechs had been acting very strong up until the consolidation area. So we're looking at a lot of biotech stocks that are showing good upside potential, J-hook type patterns. So we don't necessarily have to analyze an index and have it moving in the right direction. It could just be kind of our indicator that that we want to be looking at things in that sector. ALNY, there's your bobble. You can be buying this one on positive trading with the anticipation that if it comes back up here to the 50, you've got the potential of a bobble breakout. And I'm trying to look at this. If it moves from this level back up to this level, that's about not quite a 10% move, but you've got an 8% upside potential just to see if it's going to break out on a pattern that looks very looks like it's got a high probability of doing a J-hook pattern. Oh, IVC. Observe the obvious. Got up to the 200. They just couldn't get through. Now, after 4 or 5 days of trading, now you have a left-right combo. So now you can pretty much calculate wave 1, wave 2, going into wave 3. Terrible handwriting. EF. ZM. Ah, humbug. EP. Okay. EP. ZM. Another J-hook pattern. This is what we call the classic. Classic is fry pan bottom breakout. What's a prerequisite for a J-hook pattern? A very strong price move. So if we're coming out of a fry pan bottom, we get a very strong price move. Pulls back, starts back up. What's a prerequisite for a J-hook? That strong price move. So we can calculate if this is wave 1, wave 3 is in progress. Classic, because that's how human nature works. Breaks out of a strong pattern, does some profit taking, and continues that strong price move. AGIO, right smack dab on the T-line, starting back up. Very strong move. Let's see, EPZM, 4 consecutive close down. Has no, 4 consecutive down? No. We're not worried about that. That's just telling us what happened. They were trading it down. What's this signal right here? Anybody? That little signal. Harami. And what's a Harami tell us? The selling has stopped. If they open up positive the next day, what's that tell us? The selling has stopped and the buying has started again. So this means nothing. This is part of the pattern. So what we're looking for is when it's pulling back, when's the pullback over and what type of pattern is it going to start setting up after that? Same scenario on this one. J-hook pattern setting up, unfold. So because we can analyze what's happening in individual, commodities, or like crude oil, if we can see crude oil is acting strong, that tells us that probably that whole sector is acting strong. This is a gap up, doji gap up best friend on Chesapeake. And where did it close today? Right there. So what's that tell us? That we can buy this immediately on positive trading tomorrow because it's broken that downtrend. It's confirming our best friend signal. And what do we know about a best friend signal? There's usually a very strong move to the upside. What's the target on crude oil? I would guess that as we can see what's happening here, Pshaw. We've got kind of a major channel developing. So I would suspect anywhere up in here is the target, which then also tells us what's our trajectory for crude oil. It's probably going to be just fine, because notice what it did over here. Went from 52 down to 35 and then right back up, and then since then has just kind of been moving sideways. I bet you dime to donuts that crude oil has now gotten back into its place of trading somewhere around $50 a barrel, trading anywhere from 52 back to 44. So when it does that, that pretty much takes the major risk out of a lot of the crude oil stocks. So now everybody's going to be buying them back based upon their inventories and their prospects. So right now, you definitely want to be buying Whiting, because you can see the big fry pan bottom. And where did it break out? Right smack dab, right where this pattern started. So back to somebody's question, do you care about stochastics? No. Usually a fry pan bottom breakout is going to occur when your stochastics are already up in the overbought area. We recommended HK. Now, what the heck is going on here? Another kicker signal, kind of trend kicker, open positive today. You can still be buying this one on positive trading tomorrow. Yeah, again, the OPEC's production reduction mean, they've threatened that a few times and it's never come about. So it doesn't matter what the conjecture is out there. More interested in what is actually happening in what everybody thinks is going to happen. NR, kind of a little trend kicker. Look where we are right here. If it breaks out through this level, it's got the potential of coming up pretty strong back up into the trend. Let me see how many more we got. I'm showing you these because a lot of these, doesn't matter which one you buy. So the question always comes up, well, you've got so many good charts, which ones do you buy? Well, that's when you kind of look at each one. So it's not so much which stock is the best, because you can't ever tell which one's going to take off. If we know the whole sector is being bought, then we just try to find the best patterns in that sector. SWN can be bought on positive trading. We did CRK. CRK we've got already because that's been working well. If this opens positive tomorrow, coming back up into the trend channel. And NOV. Oh man, it's already 8:45. It's supposed to be done by 25 after. Another one that's probably coming up at least to the top of the trend channel. Again, this is where our morning star signal occurred and then bullish confirmation. Let's make these bigger. But if they break out through this level, which is still a decent percentage away, got a lot more upside. Another element that we're going to be looking, I think it was Elsie that asked today what told us that it was time to get out of this position before it reversed real big. So part of the training is, this is the most basic concept of candlestick analysis, which was the Japanese rice traders pretty much illustrated on a graphic basis of what happens in human emotions. Where do most people buy? They buy exuberantly at the top. What gives us exuberance? Well, if we're in an uptrend with no real patterns to it, and they gap it up, I'm going to just show some very simple techniques on where to take profits, which basically is if it opens positive and starts trading positive after gapping up, just put your stop at where it opened, because if it comes back down through there, it's going to give you some sort of sell signal. If it opens and immediately it starts trading off, put your stop at the previous day's close. If it comes all the way back down through there, it tells us the bears are taking control. But the message or the signal or the alert was, you're in an overbought condition and they gap it up, start watching for profit taking. Another sector that's working very well, the mining companies. There's their best friend starting on this one, HBM. Best friend right here at the breakout level. You buy this immediately on positive trading. What type of pattern? Classic. There's your fry pan bottom, strong price move. There's your J-hook pattern in setting up. Vail, another one. Kind of a big fry pan bottom. It's already had one J-hook. Now it's coming back up above the T line. Look for more upside. Probably somewhere up in this trajectory. Freeport, a lot of people have been playing this one. Notice how when it pulled back, it was very indecisive. Bunches of dojis. And what was the one key element? They never closed back below the T-line. Now they've gapped it up in your best friend. So if this is wave one, which is 40%, look for this to take you up into the $18 range. TMST, very simple. If it opens positive tomorrow, you want to be buying this one immediately. Your J-hook doesn't have to be up and pull back. Your J-hook can be a 1, 2, and then 3. And we've got this one because it started coming up above the T-line because it never really closed below the T-line and almost had us out right here. But this one can be bought on positive trading because what can you see is happening here? You've pretty much got a support level here, and up here's your resistance level. This still has another 25% to the upside. Okay, and somebody was asking about what is an island reversal, or not an island reversal, a column reversal. Column reversal is when you have a big move like this, it supports, you can have the potential, another big move right back up there, which means there's one column, there's the other column. That usually starts a very strong uptrend. So it looks like a set of columns. Oh, we did this one. This one, you're probably going to see this one on the recommended list tomorrow. Perfect bobble J-hook pattern. Where was it time to sell? Shooting star opens lower the next day. Where was it time to buy? On a positive open, or at least a positive open from here, wave 1, wave 3. So is that also a cradle? Yeah, no, I wouldn't call it so much a cradle. It's probably a cradle pattern, but the magnitude of the candles put it more in the column reversals. Doesn't matter what you call it. Column reversal obviously is a extended form of a cradle pattern. URI, another J-hook pattern in progress. GNC, this one you can see what's happened when they came up off of this left-right combo. This is why you always use the T-line. Notice when it consolidated sideways. So still has good upside potential. If it came back up here, which would kind of coincide with hitting the 50, that's a 4-point move on a $14 stock. Decent percentage return. SYMC, a column reversal. No, not really. A column reversal is a big down day, flat, and then a big up day. This to me just is that's not a real good chart. That's sideways choppy. Nothing you could really sink your teeth into on this one. Red Robin's Gourmet. This is your perfect setup for a bobble breakout. Notice your big left-right combo. Never closed below the T-line, broke out through the 50. When it broke out through the 50, where's your next target? The 200. Pulls back. Where did it not close? Column reversal is also a tower reversal, yes. Yep. Makes this one a perfect setup. That if it opens positive tomorrow, you've got the bobble breakout. And I think ERLB had pretty much the same setup. A little bit needs another day, but you put this on your watch list. Failed right smack dab at the 50, and this is exactly why you want to know what the patterns are telling you, or the signals are telling you. A bearish Harami, I don't know what it's called when the candles are both the same, but it's basically telling you the buying has stopped. Then notice what you get back here when you got back to the T-line, the morning star signal. So you keep an eye on something like this to see whether they're going to break through or whether they fail. Now this one hasn't failed yet because they're still above the T-line. So you just kind of watch, put this on your watch list. See if they can get through this level. Now notice again where the significance of the signals show you what's happening at important technical levels. There's your bearish Harami. Telling you the buying has stopped. If it opened lower the next day, you definitely should be taking profits. There's your bullish Harami. Opens positive the next day. Where's your next target? Either here or here. And when I say either here or here, because of the graphics of candlesticks, we can see very quickly that the 50 is not going to act as resistance. But we saw very quickly that the indecision and then the shooting star up here at the 200 told us that was acting as resistance, with more confirmation that your stochastics are starting to turn over. So you'll want to see bullish confirmation, because you can have the perfect trade setup, like we saw in ACOR, that if it opened positive today, you got your bobble breakout. So when you saw it open down here and trade here, you just kind of say, this one's not working, go on to something else. So that is one of the biggest benefits that happened for me was I can pick out 3 of the best trades that I think are setting up for the next day, and I can see which ones are confirming and get into those right away, and see which ones aren't confirming, not get into them. So the entry and exit strategies are very important for telling us which ones are moving in the right direction at the right time. Oh, I forgot the biggies. Netflix, you can see what's happened. Lots of indecision, back up above the T-line. You're right here at this downtrending channel. You can be buying Netflix on positive trading. Amazon, same scenario. It did break this downtrending channel with kind of a doji sandwich. Next likely target is up here to the 50. Oh, Carolyn. That's the whole point of learning candlesticks, is knowing the 12 major signals. I forget which one was the... Hold on, I'll find a... And there's our bullish Harami in Apple. More than likely, it's still heading for the 200 or for the 50. Wow, I can't remember which one was the morning star signal. Yeah. Anybody remember? Chipotle. This is a morning star signal down here. You have a big down day. Next day is a day of indecision. The third day is a bullish day that closes more than halfway up this candle. That's your morning star signal. That's basically telling you, the Japanese rice traders telling you, that that's the morning and everything else is starting. There's kind of a morning star signal right here. Down day, day of indecision. And the further this closes up above the halfway point, the more compelling there's been a change of investor sentiment. PLG, yes, that's a little morning star signal. And it's a morning star signal that has some force to it, because what's our best friend signal? A doji followed by a gap up. So if you combine that whole pattern, the third day when they reversed it, it did it with a gap up and closed more than halfway up. So if you're trading this one, I don't usually trade stocks below $5, but if you're trading this one, it's a very good confirmation if it starts trading positive tomorrow. Thank you, Richard. Okay, that's about all I got tonight. Is there any general questions on candlesticks? In charts like T2, after the earnings gap up through the moving averages, it decided to roll back, but then I got back in after Morningstar signal type thing, thinking it was a J-hook, but now not sure. You just wait until it resolves itself, or do you get out? All right, let's take a look at T2. You can see what happened here. You had the kind of the Morningstar signal, then they pulled back, but what's your criteria? You don't want to see it close below the T-line. So right now, you just stay long as it stays above the T-line. Obviously, you want to see it get back up through this little resistance level. So I would stay in, but at this point, I wouldn't want to see it close back below today's open, which would put you back below the T-line and also indicate that you weren't breaking out, that you were still stuck in this little downward trend channel. Oh, I think there is a video called the Triple T. That shows you how to use the 3T and the T-line together. So it's on our website under products and services. Yes, if you think that the gold prices are heading down, if you want to trade long, but see right now, it's not telling us anything. It's kind of got a wedge formation, so that's pretty much telling me, there's not too much there. Now, if it breaks out through this upside, yes, that would tell me the gold is still heading down. Okay, we've been getting some emails during the day on what all goes on in the 2-day training. You're going to get everything starting from A to Z, meaning the doji right on through the 12 major signals, then the patterns, then the trend analysis, everything that we can apply to common sense, high profit candlestick trades. You've seen it all out here, bits and pieces, but when you see it all in a chronological order, it starts to make a whole lot of sense. And that's the reason we keep doing the basics, because I would say the major portion of all my feedback is somebody saying, once I went through that training, it all came together. The light came on. So it's set up exactly the way it should be to kind of get everybody's, I want to say, mental understanding to realize how simple it really will be, or is, because it's all visual, and it's all signals that don't have to have any further back testing, because it's been back tested for 400 years. Will the seminar be available for download? Yes, it's all recorded. So even if you miss a couple hours or half a day, you'll have it. And even if you didn't miss half a day, whenever you want to go back and keep brushing up on it, it's yours. So, anyways, if there's any one training that that you ever want to do in the Candlestick Forum, it's this 2-day basic training. That will bring everything else together for you as you're looking at charts from there on in. Okay, with that, Jim, let's go ahead and do the double line. And in 2.9 seconds, do the next double line. Okay, let me go scroll way past me here. I think FBR was still holding up. Right now, if you're long, you stay long. You can still buy this one on positive trading tomorrow. PX, there's your morning star type signal. Big down day, day of indecision. Third day closes more than halfway up. Now, what is your further confirmation on this type of trade? Bullish confirmation, number one, to confirm the signal. And even more compelling is if they start trading it up and close it above the T-line, that tells you the next wave has started. And where is this all occurring? When your stochastics are down here in the oversold area. Cowen and Company, I actually worked for them for a couple years as a stockbroker. Probably wouldn't be long or short this one. Just not a very compelling chart. And if you like it, you can be long. Still just not a very compelling chart. There's your big fry pan bottom type action. You can be buying this one. J-hook pattern. That's a Oh, Garden Restaurants. What was the other restaurant we just looked at? Oh, Red. Did I do that wrong? Red Robin Gourmet Burgers. This one, I think it's a little bit more compelling because you can see where it's actually setting up the bobble breakout. Big breakout on this one. You can be buying this one. I would expect some consolidation since it was up like about 80% today, even more than that. But I would anticipate your first target is going to be up here at the 50. Notice how you traded flat for so long, and then you had that big breakout day. That tells you there's probably something going on there. See how this one traded flat for so long? That was your breakout alert. AGFS. I think I said that, AGFS. This one you can be buying. That's got the potential again of a tower or column reversal. Where because this came down so fast, remember the psychology of most investors. Man, if it ever gets back up to where I bought it, I'm going to sell it. Well, not very many people sold here. It just kind of crashed. That means there's not that many people ready to sell as it's moving up, so it usually goes right back up to the top of that trading range. CRZO, stay long on this one. I would suspect the trend channel bringing you somewhere up here, not a very big percentage move, but the fact that they did a bobble breakout tells you there's more than likely more upside. AIMT, I'd be ready to buy this. I would probably use today's high, which was 25.50. I'd put a buy stop at 25.52. If it comes up through there, obviously your J-hook patterns in progress. And what started this uptrend? Your best friend signal breakout. Oh, let's see. Did that one. AKAM. That's setting up. You can be buying this one in positive trading also. J-hook pattern. The pro shares on the Qs, I would just stay long. Nothing wrong with that one. Quillo backed off a little bit, but still didn't do a sell signal. So you stay long as this stays above the T-line. Again, the message is right here where they gapped it up and they haven't been able to close it below the T-line. There's a wee little teeny gap right here. And more than likely, if they take it up to that level, they're going to keep continuing right for the 50-day moving average. The biotechs, again, setting up for a potential J-hook pattern. I say potential. If we see this open positive tomorrow, especially if it breaks this little downtrend, you want to be looking at this as a trade and or a lot of the biotech stocks probably have good chart patterns. Mankind, that one you can see is not backing off any. So if I wanted to buy this, but I didn't want to watch it for a while, I'd put a buy stop right up here. I don't know what that is. Somewhere right in here. If it comes up through that direction, it tells me they've popped off the 50 and heading higher. Kratos. Nothing great here just yet. That still needs to see some confirmation. So I would not be long or short this one. Did we do AMAT? AMAT, you stay long. Con Ed. Con Ed, and nothing exciting there. It's in the lower end of the trend channel, and even if it starts moving back up, your percentage return isn't going to be all that great, basically because Con Ed is one of your institutional traders. Monster, you can be buying this one with also the idea that they will be coming up to fill the gap. You have a little left-right combo. Look for it to come back up to the 50. And ConocoPhillips. You stay long on this. I forget, was it ConocoPhillips that is part of that big field out in western Texas? I think it is. Ocular. Starting to get a little bit iffy up here, but it hasn't done a sell signal. But just as a safety factor, if I owned it, I'd have a sell stop just below today's low. If it's still coming in that direction, it's coming down to test the T-line. CELG, you stay long on this one, or you can be buying this one. CCJ. Not really exciting, but you can see that it's, all you can do with this one right now is stay long as it stays up above the T-line. And UUP, well, the dollar. Dollar's still above, still heading up, except you can see on the dollar index that you've got a gap up doji in the overbought conditions. Stochastic's rolling over. If it trades lower, expect it to come back also to test the T-line. Advanced Micro, same scenario. You've had a gap up shooting star getting up in the overbought area. Put a sell stop somewhere right down in here. If it comes back in that direction, they're taking profits. ANET. Breakout. Look for a 45 degree, kind of probably the same scenario. So notice what happened over here. When it started back up, where did they take it? Right back up into the trajectory of the trend. And AVTI. Nothing yet. At this point, I'd be out of short positions, but I wouldn't be in long. I wouldn't be doing anything on this one right now. Where did I scroll to? DNK. That's a little Morningstar signal kind of telling you they aren't closing below the T-line. This one you can be buying with the anticipation that now that they've breached the 50, next target should be the 200. So that's a good setup for a quick little trade. Lennar, the construction companies should be acting well. Fry pan bottom, you just stay with this as long as it doesn't close below the T-line. ADXS, this one you get ready to buy on positive trading. That's a good-looking chart setting up. It needs to break through this downtrending channel. If it does, you probably got a lot of running room. And CLF, setting up also. I'd put a buy stop right up here at whatever this is, 790. If it comes up through there, it's moving. Nugget is just kind of still lollygagging down here, nothing going on because gold doesn't have anything going on. I'd be someplace else. American Airlines, you had a little left-right combo. So just as a safety factor, put your sell stop just below yesterday's or Friday's low. If it comes down through there, pretty much telling you the profit taking has started and you're probably coming back to test the T-line. Sanchez Energy, gap up. You can buy this one on positive trading after the gap up. Burlington, that's a failure. You can see the left-right combo, so your next target is probably back down to test the 200. Yes, you can go short on this one. Didn't read far enough. And NSC, J-hook pattern, yes, you can be buying this one. Now, again, the percentage moves aren't going to be hellacious, but at least you'll be moving in the right direction. Tazar, probably coming back to test the T-line. If it didn't get there today, which it didn't look like it did, just make sure it doesn't probably trade below the T-line. You probably want to use the T-line as your stop. You can always buy it back if it goes down through it and comes back up. MPC, breakout, look for a 45 degree, probably the same trajectory. FedEx, FedEx, all you can do here is stay long till you see a sell signal. AVGO, nothing. Just not anything that I'd be trading. You can see how flat it is. If you're trading it, you just have to be very conscious of what it does when it gets right here, which isn't that big a percentage move. Primo Water, if you like it, you stay long. It's just not a very exciting stock. Microsoft. Microsoft is not a real good trader because of the lack of percentage move and the amount of stock that's out there. So obviously this is more of a long-term hold, and it's even as a long-term hold, it's not that exciting. I'd be trading something else. Now, Bank of America is not exciting either, except it's had, coming out of the slow curve, a 20% move over the last few weeks. And now in the J-hook pattern, you could probably still be heading higher, or it still should be heading higher on the J-hook. I think we did AKAM. You get ready to buy this one on positive trading and just use the T-line as your stop. Buffalo, Blue Buffalo, needed to get back up above the T-line, which it hasn't done. So if you'd been short, you should have covered the short. Now if you want to go short again, use today's open. If it comes down through there, it's basically telling you they weren't going to get up through the T-line. They're still selling it off. And Grub, this one you can be buying, especially if it opens positive tomorrow. But still not a very exciting stock, but it would be moving back up in the right direction. CBay, that's a toughie. That looks like you're getting some consolidation. So you had your big left-right combo down here, but now you're getting some consolidation. I would suspect they're coming back to test the T-line. Silver, not doing anything like gold, just moving sideways right now. I'd be someplace else. XLU, not real exciting either. I'd be someplace else. Wynn Resorts, you can see the Morningstar type signal, the Doji sandwich, so your McMuffin. You can be buying this one on positive trading and just stay long as it stays above the T-line. Nordic needs to get up through the 50. If it comes up through the 50, you can be buying the bobble pattern. Notice your left-right combo gap up, breaking the downward trend channel. So you want to be buying this one. You put a buy stop just above the 50. That should be your entry level. Stem cells, slow uptrend. There's your breakout. You stay long on this as long as it stays above the T-line also. Quart, pulling back indecisively. If you're long and it opens lower tomorrow, I'd close it out. But then I'd just put a buy stop up here somewhere. Because if it bounces up off the T-line, tells you exactly what we would expect, that the J-hook pattern is in progress. NTNX, nothing real exciting here. probably apparently a fairly new issue. All you can really do right now is just stay long. TK, this one you can be buying. There's your kind of your breakout of a little J hook. I'd be a buyer. Just would be more apt to want to see what it does there at the 50 or at the 200. LXU, stay long. I would suspect it's heading for the 200. And RIC, nothing here yet either. I wouldn't be short, but I wouldn't be long. It needs to get back up above the T line. Okay, I guess that's about it for tonight. That's a very short week, obviously. More than likely by noontime on Wednesday, everything will become dead. I think Friday they have the market open. I think legally they have to have the market. They can't have the market open for 4 days in a row. So it's open for a half a day on Friday. And it's usually not a whole lot happening there. So with that, we'll see everybody bright and early in the chat room tomorrow. We'll see you then.